Welcome to Beyond Distribution with GTDC Podcast. Geopolitical changes are creating uncertainties across the globe, from new policies and tariffs to potentially temporary supply chain moves. Despite those reservations, the IT industry have several reasons to be optimistic this year, suggests Emily Mansfield, Regional Director for Europe for the Economist Intelligence Unit. The 2025 GTDC Summit EMEA speaker joins host Frank Vitagliano for an interactive discussion on European and worldwide concerns and factors that could boost or impede IT spending in this episode 52 of Beyond Distribution. Listen and enjoy and catch up on all of our episodes on our Knowledge Hub at www.gtdc.org. Thanks for listening.
Welcome, everybody. This is Frank Vitagliano, and this is another episode of our Beyond Distribution podcast. I'm delighted today to have Emily Mansfield from the EIU joining us for the second year. Emily, welcome.
Thank you.
Yeah, it's great to have you. And, I was thinking back about last year's discussion that we had, and so much has changed since last year. And I don't know where to start, but I'll give it a try, and I'm sure between the two of us, we'll figure it out.
Sounds good.
So, I guess let's start with just kind of your view on the macro global economy and everything that's happening, and et cetera, and then we'll go from there because it's certainly moving quickly.
That's for sure. Well, should we try and start with some positives before we get into all of the negative things?
Definitely like to do that.
So I guess the big story that we've been watching over the past few years is what's been happening with inflation and interest rates. And inflation really surged, and that caused quite a cost of living crisis. But the trends when it comes to price growth are really quite positive. The inflation is coming down. That means monetary policy is starting to ease. Central banks are cutting interest rates. And we're expecting inflation to be at or just above that sort of usually 2% target of major central banks this year. So that's good news when it comes to consumers' purchasing power. Lower interest rates as well mean that, of course, it's cheaper to borrow money. And that's good news when it comes to both consumer spending and also businesses' ability to borrow and invest.
And so, is that a global, is that a European viewpoint, Emily, or I know the U.S. those numbers are very similar. Is that for both the U.S. and in Europe that you're thinking that's happening? Yeah.
Yes, that's right. That's right. I think maybe one exception is Japan, where of course the challenge has not been to get rid of inflation, but to bring it back. And there has been some success in that, which means that actually monetary policy normalization is sort of happening in the opposite direction in Japan. But with that exception, yes, we are looking, and of course, China, of course, has completely different dynamics as well. But when it comes to the big Western economies, across all of those major economies, we've got interest rates coming down. In historical terms, in level terms, those interest rates are still elevated for the moment, but they are heading in the right direction. So that's one really good thing to hold on to. We are heading in the right direction. I think perhaps the problem is that this good news story is being very much overwhelmed by a huge amount of uncertainty that has come into play, particularly since the US election, and all the more so since Donald Trump took office as US president. We have had an awful lot of announcements about tariffs being announced and then applied and then pulled back. There's a ratcheting up of pressure, there's pulling back of threats. There is an awful lot happening. It feels sometimes a little bit capricious. It is very unpredictable. I would say that unpredictability is a feature, not a bug. I think this is intended to be a destabilizing moment of change, moment of pivoting in terms of US policy. US trade policy, of course, becoming a lot more transactional as well. There are specific things that Trump would like to achieve. But for the moment, what we're mostly seeing is just a lot of disruption. Of course, this is very difficult for businesses who need to plan ahead. So far, we've got tariffs on China, we've got tariffs on steel and aluminium, some retaliatory tariffs as well now coming into play. tariffs also on a slightly more amorphous group of what are being termed reciprocal tariffs. This basically means anything the US administration considers to be unfair trade practices, which could range from anything from tariffs to non-tariff barriers, and even to taxes that the US administration considers having an unfair effect. So that could be things like value-added taxes in Europe, could be things like digital services taxes as well. Perhaps digital services taxes are actually a little bit more controversial because of the fact that, of course, the big digital services platforms are US based. So they're the ones that are going to be most hit. So clearly, a lot coming, a lot still to come. And then you have the whole question about what concessions could be on the table and what retaliation can be on the table as well. So yes, the interest rates and inflation story is the good news. The tariffs, I'm afraid, are the bad news.
Yeah, the interesting part of it is, I think just the uncertainty is also rattling people a little bit too, right? Because one of the things that I know Wall Street gets very concerned with is any level of uncertainty, and every day brings something new, which is rattling a lot of the financial folks, I think. But talking about interest rates a little bit. What we've seen, what we're starting to see, I think you mentioned, is interest rates appear to be coming down, but yet they don't, it's not coming through yet really to the point where, like, for example, the housing costs are still very, very high, compared to housing interest rates, very high compared to where they were 3 or 4 years ago. Why is that, and is that something that you think will continue, or how do you see that playing out a little bit?
So when it comes to housing, there are some quite specific dynamics that have to do with supply and demand. And so in a lot of places, the problem is actually the supply side. And in the UK, for example, where I'm based, there's a big push to try and build more houses because that's actually what's pushing up those house prices. The broader issue, though, when it comes to interest rates is that, yes, they are coming down, but they're not going to come back down to those nice, comfortable near zero rates that we all got very, very happy with in the sort of, last decade prior to this big surge in inflation. And there's a few different reasons for that. One is that economies just have a lot more things they need to invest in these days. So we've got aging populations, so we're going to have to spend more on pensions and healthcare. We've also got much bigger needs for defense spending, much more investment going to have to happen when it comes to defense and security. We've also got higher wages, and that's to do with tighter controls on immigration and also those aging societies. These means there's a smaller labour force, and therefore that pushes up wage costs. All of these things mean that we're just going to have a slightly higher rate of inflation in the economy, and therefore higher interest rates over the long term. Of course, I haven't mentioned the impact of climate change, which affects both house prices through those insurance costs in a number of places, and then also, just pushing up costs across the board. And of course, that's even before we start thinking about the impact tariffs will have. So lots of reasons to expect interest rates to remain at a higher level in the coming years than they have been in recent years.
Yeah, well, you mentioned two things that I want to touch on. One would certainly be tariffs, right? And talk a little bit about that with you. And then defense spending is another topic, which we'll get to. But on the tariff piece, obviously, this time feels different, right? When Trump's first term, there were tariffs that were put in place, right? And there was a little bit of tension around that, but it sort of seemed to just settle out, and it really didn't appear to have a significant impact on a long-term basis. This time feels different, and it feels like it could be more significant, and there's more tension around it, at least initially. Where do you think the biggest impact will be as it relates to the tariffs, in terms of what regions, what countries? And of course, we're in the IT space, so, we're quite concerned about it based on where a lot of things are manufactured and sourced from. So what's your take on all of that?
Yes, so the main reason that this is having so much of a bigger impact this time around is that the figures we're talking about are just so much bigger. These are several orders of magnitude bigger than what Trump did in his first term. So tariff rates of 25%, that is off the chart. This is very, very different situation from last time around. I think also the people that Trump is surrounded by are much more on board with exactly what he wants to do this time around. So instead of having a kind of good cop, bad cop dynamic between Trump and his advisors and the people implementing his plans, this time there is very much just a kind of, yep, this is what we're doing approach. And that is definitely concerning for a lot of countries around the world. We put together last year what we perhaps slightly mischievously call the Trump Risk Index, looking at which countries would be most exposed to policy shifts under Trump. And of course, on trade policy, on defense policy, on immigration policy, you can really see which countries are likely to be most exposed. And often it's really close US allies, trading partners. That's another big shift here. So it's not just a strategic competition or rivalry with China, for example. It's much more across the board. So places like Canada, Mexico, potentially Europe, in the firing line as well. If we look at the immediate kind of economic effects, I think Canada is certainly at risk of falling into recession if tariffs really do come in at the kind of rates that Trump has proposed, and particularly then if that turns into a sort of tit-for-tat retaliatory tariff trade war. There will be, of course, a slowing impact on China's economy, which tends to have ripple effects around the world. Mexico, very, very exposed just because of the depth of those trade linkages. For Europe, we're a bit further away. So yes, the US is the biggest trade and investment partner for Europe, but as a share of the total, it's much smaller than is the case for Canada and Mexico. So Europe is not going to be quite as badly hit. But it's very unpredictable. And I think, as you say, this is one of the big things that's really concerning firms all around the world.
Yeah, and also, as I recall, we had some discussions. In fact, when we were in Singapore, your a gentleman from your company spoke to us, and we talked about the fact that previously what happened was the point of origin for a lot of products changed from China to other places. All of a sudden, Vietnam expanded significantly, right? Doesn't appear like that's going to happen again, at least to the same degree, right? That we're kind of past that phenomenon, if you will.
Well, it's interesting. It's definitely, I mean, you can look at a chart, for example, of Chinese exports to Vietnam and Vietnamese exports to the US, or Chinese exports to Mexico and Mexican exports to the US, and it's a mirror image. Like, it's not subtle what's been happening here.
Right.
And I think that trend is going to continue. I think it's definitely happening where that production is definitely being outsourced to these third connector countries. And those supply chain shifts, I think are here to stay. There's a slight concern that Trump will also want to crack down on those countries because, as I say, it's not that subtle. You can see what's going on here. But for the most part, I think that is considered to be a safer bet. So Southeast Asia really benefiting, India as well, and of course Mexico and Latin America. So.
Yeah, it is a little disconcerting though, because I think one of the things that may be underestimated is how complex some of these supply chains really are. And they've been in place for years and years and years, and it's just not that simple to make major changes on the fly without a lot of thought, and a lot of real consideration. So it's certainly troublesome a little bit.
Yes, and I think that the same applies to Trump's hope that firms will decide that all of these tariffs make it more attractive just to produce in the US. Yeah. So far, that's not actually what we're seeing, partly because the policy environment is so unpredictable that companies don't necessarily want to take a bet on massive capital expenditure to move production back to the US. And partly also because maybe, okay, sure, there's tariffs coming into the US, but your labor costs are going to be higher in the US too. So maybe that means that it's not it's just not economical to be producing that particular good for the US market anymore. So I think this plan to, as Trump would like to get more production happening in the US, and of course that's a common, perfectly legitimate thing that lots of governments have wanted to do in different countries in the past. But I think the way that this is happening is unlikely to have that effect.
Yeah, well, and plus it doesn't happen overnight.
For sure.
I mean,
Yeah.
it takes a long time to build plants and all the infrastructure required to do that, and it takes some time. Let's transition a little bit to specifically to Europe, and you mentioned defense. I know that the EU just unveiled a pretty significant, I think it was $840 billion plan to strengthen defense in Europe. How do you see that impacting the region? And are there any countries that will be affected more than others, or do you think it'll be like an across the board kind of an impact?
So this is really interesting. I think that what the US is doing in terms of weakening security guarantees for Europe and eroding a setup that's basically been in place since the end of the Second World War, this is a very, very major shift with very serious ramifications for Europe and its security. So yes, we are seeing this surge in defense spending and discussions that are very much ongoing still about how exactly Europe can get enough money together to spend what it needs to spend on defense, but also can coordinate well enough, because that's the perhaps even the bigger problem. That Europe is very dependent on the US, not just for the military hardware, but also for the software that underpins it, for maintenance, for logistics, coordination, intelligence. And of course, everything is sort of interoperable within NATO with US systems. So Europe is very dependent on the US. And it's not just a question of spending more, but we are definitely going to see more spending. And as you've mentioned, the EU has been talking, I think it's 800 billion that they're bigging up. The problem is that in part this depends on EU member states spending more, and in part it's loans. It's not grants, it's loans. So that means it still shows up on the debt balance sheet of these EU member states, many of whom, particularly those in Southern Europe, are already very indebted. So it's not quite as attractive as it sounds at first glance. I think what might be more of a game changer is ongoing discussions about common EU defence bonds. And if EU markets could borrow at an EU level against the EU's credit rating, that could, and then that wouldn't count against their national debt, that could really spur a lot more spending, including by places like Spain, Italy, who perhaps have been reluctant to do so far. But I think the other thing to mention on this is what is happening in Germany, with a very big policy shift by Friedrich Merz, who has won the election. He's not yet chancellor, but he's almost certain to become chancellor, probably by about Easter. And he is looking to change the constitution such that Germany can spend a lot more on defence. He wants to exempt defence spending from that constitutional debt brake. And he's looking to pass this in the current parliament before the next one comes in order to have the 2/3 majority that they need to change the constitution. So he's looking at a 500 billion euro infrastructure spending fund, and then potentially unlimited defence spending. This is a huge policy shift for Germany, which of course has very much been all about fiscal probity, and that's actually held the German economy back a lot. So if we do start seeing a lot more spending from Germany, that is going to be very significant news.
Yeah, it's funny you mentioned that, because one of the things I wanted to talk to you about was, in addition to the leadership in the US changing, there's also been leadership changes throughout the rest of the world. Germany, for sure. Canada, for sure. There's just been a number of changes. So how do you see that playing out, and what are some of the other potential impacts? Because I was not aware of what you just described, because that is a major change for Germany that was clearly brought on by new leadership.
Yes, Absolutely. I think it's a very courageous move, actually, by Metz. Not quite what he was saying on the campaign trail, but this recognition that if the US isn't going to back Europe necessarily, then things really have to change in a big way. So yes, Germany is perhaps the most significant one here with this shift to the centre-right following the snap election at the end of February. It looks like we're going to have a sort of centre-right, centre-left coalition working together. And they've got the Greens on board to pass this constitutional amendment in the short term. And that's, so we're looking at €500 billion just on infrastructure, which is 10% of Germany's GDP. And infrastructure spending has really been lagging in Germany, and that's been the economy back for the past few years. German economy is the same size now as it was before the pandemic, and it's been contracting for the so fiscal spending like this could be really, really impactful. In terms of other kind of big leadership changes, I think one thing that we can see is happening with Trump posing tariff threats on a number of countries. And of course, we've not even spoken about what's happening in Ukraine. But any kind of external threat like that does tend to produce a rally around the flag effect. So we've seen that in Ukraine, Zelensky's ratings have gone through the roof. In Mexico, you see approval ratings shoot up. And of course, Mark Carney now coming in as the new Liberal leader and Prime Minister in Canada, definitely benefiting from exactly the same situation. Of course, they've got an election just coming up. Not certain that he'll win. It looks like the Conservatives are slightly ahead. But it's very much changed the dynamics of that race, because suddenly any kind of external threat tends to unite the domestic politics. And
the UK also has had a fairly recent change, haven't they? Yeah,
that's right. Yeah, last year. So we've got Keir Starmer now, with the Labour Party taking over after 40 years of Conservative rule. And what's really interesting, actually, just in the last few weeks, is seeing Starmer step up on the global stage. And so much more cooperation happening between Emmanuel Macron in France, Friedrich Merz, who will soon be the German Chancellor, and Keir Starmer in the UK. And of course, with the UK out of Europe now, that kind of cooperation wasn't happening so much. And there were hopes that things would step up in terms of UK-EU ties once Labour took office. And it really feels like defence is the area where that is really going to have an impactful change. And so we're seeing that kind of cooperation is very much happening. Macron, I think domestically, he's a bit of a lame duck president now, with this sort of minority government, since he called a rather ill-fated snap election last year. But on the international stage, he still does have some clout. And of course, the UK and France are the two nuclear powers in Europe. And there's discussion now about whether Europe needs to actually have a nuclear umbrella of its own.
And I think the response to the Ukrainian situation from the rest of Europe has actually been pretty positive, really. Regardless of what people think the ultimate answer should be, the fact of the matter is that the Europeans have rallied around Ukraine and what's going on. So we'll see how that plays out. That's certainly going to be, very interesting over the next 3 to 6 months, I think.
For sure. For sure. Yes.
So one of the, Emily, we talked a little bit about, the U.S. changes, but one of the things that drove a lot of change in the U.S., and I'm wondering how it impacts Europe from your standpoint, was immigration policy. The immigration policy, in the U.S. was ultimately, probably at the end, the most significant factor, right? That a lot of people voted on. There were just a lot of people that were very unhappy with the way it was going. Talk to me a little bit about Europe, because I know there's similar discussions in various countries in Europe based on what's happened and their policies over the years. How do you see that playing out in Europe?
Yes, so immigration is also a very controversial issue across Europe, and it is one that is driving a lot of political polarization. We've got a big surge in support for far-right parties in Europe. We can see that, for example, in Italy. Giorgia Meloni is in power, The Netherlands is now led by a government with the far right, the biggest party. It's a slightly more complicated patchwork situation in Europe, where we've got lots of different setups in different countries. So, for instance, in Sweden, the far right is not in government, but it supports the government from the outside. In Austria, the far right won the last election, but they're not going to join the government. In Germany, increasingly popular, of course, and in France as well, increasingly popular. But what we're seeing, I guess, in a lot of European governments is, because we've got a lot more proportional representation, you end up with a situation where voter support becomes increasingly fragmented across lots of different parties. And then you end up having to have increasingly big coalitions that pull together lots of different parties that aren't necessarily ideologically aligned, either including the far right or intentionally excluding the far right. And it makes it much harder to build stable majority governments. So overall, that contributes to political instability in Europe. And we're seeing more sort of government collapses and slightly awkward coalitions that try and get along. Germany, of course, one instance you can look at, the Alternative for Deutschland, the Germany's far-right party, actually came second in this snap election in February. Very unusually, both Elon Musk and JD Vance got sort of involved in that election campaign. And I mean, you can see that looking in from the outside, you would say, why is this party that is second in the polls excluded from power? Why is there this firewall, cordon sanitaire, that the mainstream parties are using to prevent any cooperation with that party? That doesn't look democratic. Of course, if you are more familiar with the party, then you recognize that actually in Germany in particular, the far-right party is a lot more extreme than any other far-right party in Europe. It's not like the far-right in France or in Austria. It has figures who are neo-Nazis. It is under investigation by the security forces. It is considered an extremist threat to society. So some of these far-right parties that they've actually got views, particularly on immigration, that are becoming quite mainstream now. But other far-right parties are really very extreme and quite toxic. So there's quite a spectrum of different setups in different countries in Europe. But it's fair to say that immigration is definitely a key issue for the electorate. I think the difference perhaps in Europe is that we have much more of a shrinking and aging population. So the economic need for immigrants, particularly in certain sectors, things like construction or healthcare or retail, is actually higher than it is in the US. So in economic terms, this is slightly tricky, but we can definitely see that governments are increasingly shifting to the right.
Yeah, I think, well, I mean, I guess when we have the discussion, we should always preface it by saying illegal immigration versus normal immigration, because to your point, for the labor force, it's good to have immigration, but it needs to be controlled. It needs to be managed properly. And that, frankly, has been, a big issue globally, right? I mean, and people have been talking about it for years and years and years, and it ebbs and flows a little bit. And certainly the last 4 years in the US, there were a lot of people dissatisfied with the way it was playing out. And clearly in Europe, you see that in various countries. We're getting ready to kind of get to our time here, Emily, but I did want to mention that I'm really looking forward to having you come to our event coming up on April 3rd in Madrid. And I know you'll be speaking at the event. So for those folks that might be listening in, give me a quick preview of what you'll cover. I know obviously a lot of what we just talked about will be in your presentation. Is there kind of an overview that you would provide us with?
Well, I mean, the way things are going at the moment, I feel like, a lot could happen in the time between recording this and the event.
So everything that we just talked about might all change based on what's going on. That's an excellent point.
Exactly. Right. But yeah, I mean, definitely a bit more detail about what the plan is around these tariffs and where they're likely to go and the impact they're going to have, drilling down into what the motivations are behind them, how they could play out, how countries could react around the world. And I think perhaps more broadly as well, there is this whole geopolitical angle as well about how we are shifting into a much more transactional, much more multipolar world. And that means that countries are making different decisions, whether that comes to defense, whether that comes to their trading regimes, whether that comes to their foreign policy positioning. And I think a lot of firms, of course, also looking to adapt to a rapidly changing world. We've mentioned that Southeast Asia doing well out of this sort of China +1 supply chain shift, as the US-China rivalry shows no sign of abating. But then we've also got this huge surge now in defense spending in Europe. So very big shifts, I would say, both in geopolitics and in economics around the world.
Yeah. Well, I would tell you that, when we've talked before, it's always been interesting and it's always been exciting, but this seems like it's even more interesting than it's ever been. So we're really looking forward to seeing you in a couple of weeks in Madrid. And I know the audience will be looking forward to hearing the latest, which may or may not be what we just talked about.
Exactly. Let's wait and see what happens. But yes, very much looking forward to it.
Okay, Emily, thank you very much. And I'll see you in a couple of weeks.